Hello, everyone. Thank you so much for joining us yet again on your Mortgage Minute tips and tricks with the Linda May Tomko, home financing advisor with ScotiaBank. Who am I that's talking to you? Well, I'm Alex Ward, broker owner of Maxwell Devonshire Realty, your favorite broker owner, and I get the pleasure of listening to Linda May Tomko and doing a little bit of debate with her almost every
Oh, are we
Monday.
debating? Are we doing
Uh,
what are we doing? A rate debate today? Today?
Well, it's not a debate today because I'm a clear winner in our year-long chat about rates, where I will give props to National Bank, as their economists were the only ones at the start of the year to actually predict that the Bank of Canada rate would drop to 3.25, where all the other major institutions had it around 4%. Um, so they got it bang on. I thought it would be at 3%. I was 0.25 off, but that still beats the 0.75 the majority of the market, like Linda May thought it was going to be. But not here to toot my
Well, I
horn.
mean, banks are notorious for taking kind of we don't go right in. We usually kind of take
Yeah,
a
yeah, yeah.
lesser
That's an
approach.
employee of a
So
bank trying to say why they were wrong. Yes, they didn't. Yes.
you were wrong, but still kind of right. So I
Yeah,
mean,
yeah, yeah, yeah.
we'll
In economist world, I was spot on, horribly wrong.
in a
Anyways,
banker's
that's not what
world,
we're
you were
talking about
wrong.
today.
No.
We're not here just to pump my own tires. We are actually here to listen to all the changes that just took effect yesterday, December the 15th, 2024, for mortgages, because there was a lot of them, and a lot of these are going to have major impacts for you in the short term and in the long term. So, Linda May, what were those changes? And the floor is yours.
So effective yesterday, we changed the insured amount. So it used to be that you couldn't get an insured purchase, or you couldn't purchase property that was over $1 million if you wanted to put minimum down payment, meaning less than 20%. And that has now increased to 1.5. That is effective today. Basically, what that means is you can put minimum down payment on any purchase up to 1.5 million. The other major change that took effect was if you are a first-time home buyer or you were purchasing a new property. So it can be it used to be you had to be both. So you had to be first-time home buyer and purchasing a new property, you could get a 30-year amortization. You now can be either one. So if you're purchasing a brand new build or you're a first-time home buyer, you can take an insured mortgage up to 30 years. So that I believe that's really going to stimulate the economy. It's really going to help the builder market as well. The other major change that took effect was you no longer need to qualify. If you're changing lenders, you don't need to qualify at the qualifying rate anymore. So you can move lenders if you have an insured, or if you had purchased a property and your mortgage is currently insured, you can move lenders without having to requalify. Um, and then there is some changes that are coming. So when it comes to refinancing a current primary residence, if you're putting a second suite in your home, you can actually take a 30-year amortization on that. Or sorry, not a 30-year amortization. You can refinance that as an insured mortgage and pull the equity out of your home. That's not taking effect with the insurers until mid-January, but it was released today. It takes a lot of time for these systems to come up and running when we're doing major changes like this. And to be honest, when all these rules came out, it was kind of news to the insurers and the lenders. So we had to take kind of a month to get our systems in check. So it is effective today for the 1.5 million insured mortgage and or the insured purchase, and the 30-year amortization for the new first-time home buyers and the new builds. But the refinance is it's going to take a little bit of time, and we're probably not going to see that up and running until mid-January. The other major thing that we wanted to talk about was uh, the bank or the Bank of Canada did lower prime rate again, so they dropped it by 0.5. That was last Wednesday. So that affects variable rate mortgages and it affects any sort of line of credits or anything that's running off prime. It hasn't changed anything to do with fixed rates as of yet, because fixed rates are how we calculate fixed rates is based on the bond market. And the bond markets actually were increasing a little bit prior to prime rate being dropped. We may see things coming down, over the next couple weeks or even into January. But on a fixed market level, things really haven't changed in that world as of yet. I'm not saying that they're not going to, but it hasn't happened as of yet. So, what do you have to say about that, Alex?
Yeah, well, the variable rate is going to continue to plummet over the next year, so we'll see, and then that will for sure have a reaction on the bond market. But just to clarify a little bit about the transfers on a renewal or an existing
Mm-hmm.
mortgage, you still have to qualify with the new institution. You just don't qualify underneath the qualifying rate.
Yeah, so you still have to show that you have income and you have to qualify to carry the debt. You just don't have to qualify at that qualifying rate.
Right. So just so
Right.
everyone's clear, can you just provide like what that actually means as far as difference in numbers?
So when we were doing, like when you were moving institutions prior, you either had to qualify at prime, or sorry, the qualifying rate at 5.25, which is or your rate plus 2%, one or the other, whichever is greater. That's gone. So you still have to be able to qualify at your current rate. So it's not that you can't just move over and keep it. You still have to be able to make the payments, but you don't have to qualify at, say, that 2% higher.
Right. Yeah. So if you're renewing with your current institution, chances are it's just signing a renewal document. You don't
Right.
need proof of qualification to renew with them. But if you are still looking at moving it, it means you don't
Right.
have to qualify at as if you were a brand new purchase. You can still qualify at
Totally.
regular debt to service ratios, which each institution will have slightly different models on what they approve for that.
Right. And I think, there was a lot of people just renewing with their current lenders because they either couldn't qualify at that higher rate, or things had changed for them and it just wasn't working. So this is going to open up the door. It's actually going to open up the door, I think, even for some rate, just some rate drops as far as institutions, because the lenders are really going to fight for the business, right? Because now they know that it's out there and people are going to be looking at rates. Whereas before, there was just a lot of people that were not moving because they couldn't make that change. They
Yeah.
couldn't qualify at the 5.25 or the qualifying rate, so they just signed with their lender.
Yeah.
But this is going to be really good for people because now you can go out and you can shop for that better rate.
Oh, this will be fantastic for the consumer. This is long overdue as far as a competitive standpoint. So yes, this is, regardless of what you think of the federal government, this is one really good change that is being implemented as far as mortgage renewals is concerned. The other big one that you
And we
talked about,
have a huge amount of renewals coming up in 2025. So
yeah,
we had a huge amount coming up, or that came up in 2024. We have even more coming due in 2025. So it has kind of hit the timing perfectly, for those people that are renewing in 2025. And like you said, with rates coming down into the new year, their projections are that we're going to see another 0.25 in January come down on prime, which, you're saying higher. I don't know. I'm going to take the conservative approach, right, and say 0.25 in January, which will impact fixed rates as well. I believe into the new year. And then that's just going to move into all these mortgage renewals as well. The other thing I should note, if you have a current insured mortgage, because there are kind of different rates, like the way that we quote rates, there's conventional rates and there's insured rates. And a lot of people don't understand the difference. And so when they call their lender and they say, I just want a quote on a mortgage, you when you're speaking with somebody, you kind of have to ask them, when you purchased this property, did you put 20% down? If you didn't, then it's registered with an insurer. And if it's still registered with an insurer, then we can actually quote the insured rate on that. So there are two different kind of rates out there in the market. Actually, there's more than two different rates, but I won't go into that. But just, in basic terms, there are two different rates, and you do get a little bit of a discount when it is an insured mortgage. So if you are moving your insured mortgage, if you purchased your property, say 4 or 5 years ago and you put 5% down, it's an insured mortgage. If you're moving that to another lender, you're going to be asking for that insured rate unless you're planning on pulling equity out. If you're pulling equity out, then it's going to be considered a conventional unless you're pulling equity out to purchase a second suite in your home, then it may still now be insured. So there's so many options with mortgages right now. My job just got harder,
Oh,
basically.
good, because it was too easy before.
It
So
was too easy. I
that's
feel
good.
like, they're like, hey, we're throw the ball here. We're
Yeah.
gonna we're
The
gonna
other,
give
the
her
other
some
thing
learning.
that you did talk about though was the increase for from 1 million to 1.5 million for insured mortgage products. That's going to have a huge impact on the Edmonton and Calgary markets
Right.
specifically because our average purchase point is below that $1 million mark. And part of it was because there was just a hard cap on what people could use for insured. Now that this is
Well,
opening it up, I am anticipating this will actually have a drastic impact on prices accelerating both in Calgary and in Edmonton. So the difference in your down payment goes from 300,000 for 1.5 to something like 75
100. Yeah, yeah, yeah.
for the insured product. You still have to qualify on the debt servicing perspective with all that additional debt instead of having it in equity. But there's people that can afford it, and that's going to have a drastic implications.
Totally. Yeah. And so just I guess to kind of talk about that, just so I want to explain the down payment. So when you're purchasing a property and let's say it's over 500,000, you can put 5% down on the first 500 and 10% on the difference. So, that's how that number works. But yes, it's a huge difference. I mean, if you were purchasing, say, something for 1.2, you would have had to put 20% down. Now you can put, around 7%. And you're going to have a cheaper interest rate than you would have at a conventional mortgage as well. And I agree with you. I do think it is going to increase pricing because a lot of the builders would put their pricing at like that 999,000 just so they could stay under that $1 million mark, and so that they could open up their product to more buyers, right? And now they don't have to stay below that 999. I think Alberta is gonna see a real increase coming into spring. Like if you were planning on not working a lot in the spring, and you're a realtor or a builder, I would say you probably need to take your vacation very soon because you won't have one in spring and summer. We will be very busy.
Yep. So with all that being said, means get your pre-approval done now so you can be ahead of the game, and then that way you're actually one of the prepared one for this upcoming busy winter and spring market. Reach out to Linda May Tomko, phenomenal home financing advisor with Scotiabank. I'm Alex Ward. We're probably not going to chat with you until the new year when the Bank of Canada announced a 50-point reduction, not 0.25. So just telling you, it's going to happen. Next year is going to be about another 1.75% drop from the start to the end of the year. Just telling you it's going to happen. Don't need to listen. Don't need to believe me.
I,
Just
I am game for it.
follow
Like
the
you and I have talked about, I have a variable rate mortgage. So hey, the more that it drops, the better for me.
yeah.
So I hope so. I'm gonna take the conservative approach and say it's gonna be 0.25 in January, but we will see. Um, I hope everyone has a happy holiday season, safe. I guess it'll be busy whether you're in real estate or not. Um, and happy new year. See you guys in all 2025.
See you, everyone.
Okay. Have a
Bye.
great day.